Good morning, Story Trading VIPs. Boy, do we have a lot to cover now. Bear with me. I got a bad cough this morning. I was a little late because there was so much news to digest. And man, I won't even know where to start, but we'll try. We had midterm elections last night, right? So there were some big ramification for that, I think, on DWAC and RUM. We're going to look at that in just a second. You can see SPY, QQQ, both down 0.5%. There was no big red wave, right? Now it seems that there's still a decent chance of a divided Congress, gridlock. Wall Street usually likes that. There was some commentary yesterday in financial markets that the market was looking for that and was setting up for a move up based on that happening. Now, again, that can still happen, but it's like a muted reaction from the market here, down 0.5%, because there's a chance it won't happen, number one. And again, it was not a red wave impacts for DWAC. But also now, because there's no big, strong storyline for today, right, then the focus is tomorrow's CPI. And I think that's probably one of the main reasons why you're seeing pressure today, SPY QQ, but also our very smart TLT. The bond market's probably looking forward in a negative way to CPI tomorrow. You can see ARK is down with TLT. So this makes sense, right? TLT down, ARK down, UUP up, strong dollar. We saw some divergence recently, which didn't make a lot of sense to me because I didn't do enough research in terms of UUP rebounding while TLT was going up last week. So that was an interesting divergence in action. But now we're back to everything that makes sense. Like bonds are down, risk is off, ARK is down, Bitcoin is down, right? CPI tomorrow, probably a good idea to take some risk off the table, take some cash off the table to be prepared for tomorrow. Maybe you want to buy some puts or be short the market with something like PSQ. All that is in play. Now, the big stories, which we're going to talk a little bit about, are going to be DWAC, Meta, Tesla, Disney. We'll get to that in just a second. But first, just want to note WEAT, not a big move today, but Tony in the room did mention there was some geopolitical event possibly that could cause WEAT to pop, something with, what the ongoing saga we've had with exports of grain from Ukraine. Now, it didn't pop, so perhaps that was not as big as he thought. But I do want to point out, and I pointed out to my new colleague in the fund that he's managing, that when markets go down like this, or let's just take, for example, that CPI is going to be hot and markets will head down. When that happens, you'll often see stocks like the new fan doing well in that period. So I actually think it's a good time to look at agriculture stocks almost as a hedge, right? They may perform well. So I'm actually excited about, let's look at three of them. ADM here. I still have the view that this is going to break all-time highs and head to 105. And while I might be afraid to hold like a high-growth stock into CPI tomorrow or a high-tech company that's been up a lot in the last month, ADM, I wouldn't be afraid to hold. CNHI, which we covered yesterday, really, really great earnings, better than our TWI even. But CNHI had a couple price target upgrades this morning, one from Morgan Stanley, one from Oppenheimer. Or that's a new one, actually. We had three. So Morgan Stanley and CFRA, that had a $17 and $18 price target. Oppenheimer, not sure what their price target is. So we've had three upgrades, so at least the $17 to $18, okay? And TWI, maybe, actually, I forgot to put it up top. Let's see where it is. TWI, also something that, might get a bid in a down market. So that's something to consider. Now, another agriculture stock, we'll get into the big stories in just a second, but Spartan, they had earnings this morning, and I went through it, and I wasn't so impressed. They pre-announced the top line, the revenue, the other week, and it was heading towards 52-week high here. I went through this report, and EPS is really light. Like year over year, it's down. They're having some cost issues. It's not going to the bottom line like what it is for ADM. So, hey, I don't know the company well. Maybe it's going to take off anyway, but I'm staying away from it because I did not like the fact that earnings, I think, were down year over year. Take a look at it. I may be off on that fact, but the general characterization is correct. I was doing so much reading this morning. I don't remember every single detail, but the main takeaway is correct that the earnings not as good as the revenue. not hitting the bottom line. Spartan Nash, maybe that's why there's a relatively high short position on this. I don't know, 8%. So Spartan Nash, I'm not interested in right now as a hedge. ADM, very interested in. CNHI, secondarily interested in. Okay, now let's get to the big stories. Midterms last night. Listen, to understand DWAC, you have to understand politics, and you have to accept the reality that DWAC is basically a proxy for political opinion about Trump. Okay, by people who like Trump, right? What are his prospects? Are his prospects good? Then DWAC goes up. Are his prospects poor? DWAC goes down. Okay, and why do they even connect the two? Well, part of it may purely be sentiment, people voting with their pocketbook and saying, hey, this is how I support Trump. And the other thing is there's a fundamental extrapolation. If Trump is famous and is president again, then his Truth Social platform will do well. And you got to weigh that against the fact that, hey, this merger may not even close. But today we're down 18% because a lot of Trump-backed candidates did not do well last night at the same time when Ron DeSantis had a blowout in Florida. So the talk on the street, the speculation, the sentiment is that, hey, now there's a much more increased chance that DeSantis will not only be running for president, but has a chance of beating Trump in the primaries because of the developments last night. And that's why you're seeing DWAC down 12, 13, whatever percent it is right now. Last night on the post-market wrap, when I was talking about DWAC, I'm like, hey, if there's a huge red wave tonight and the MAGA candidates win, there are several MAGA candidates and a lot of them are losing. It seems there's a couple of them that may win, but some of the high-profile ones like Dr. Oz losing to Fetterman, who Trump, high-profile endorsement of Dr. Oz. So, but we're not getting that. We didn't get that last night. If we did, I think you would have seen DWAC go up even further if all of those MAGA candidates won. And this is why you're seeing 18% off, so much pressure on DWAC, and that's going to rub off onto RUM. That's just how it is, especially in pre-market. Now, there's a chance that RUM will bounce back and kind of outperform DWAC in regular hours. I've noticed in extended hours, the relationship is much more one-to-one between RUM and DWAC. But then when you get into regular hours, you get more institutions into it because there is a fundamental story here with RUM, whereas DWAC is only based on sentiment. However, RUM earnings are Monday. Okay, I don't know if it's Monday morning or Monday after the close. It's coming up. I believe I believe RUM is overvalued. I did recommend to the fund consulting with to position for that. Either take profits on RUM ahead of Monday earnings or buy puts going into Monday earnings. And I don't see anything changing the story here. Now, RUM probably had a record night last night. Maybe they'll tweet that out this morning. Maybe that's something that caused an intraday pop on RUM, which can maybe cause a little bit of outperformance compared to DWAC intraday. But look at this chart pattern. It got rejected off 1350 resistance, which I'm really kind of calling all-time high 1350. All right, forget about CFVI and forget about these first two candles where it was an inefficient market where you actually couldn't sell your shares even if you wanted to. So 1350 is really the all-time high. It got rejected there twice, pulling back. It's now forming like a topping M pattern, and I think there's a good chance to seize 10 in the 10s or possibly below on or right after earnings. Okay, so be prepared for that, and then probably gets bought back up to again. So that's big story number one is the election, the impact on RUM, and I guess big story zero before one was CPI tomorrow. But big story number two, let's go to it. Meta, I talked about this a couple times on pre-market show, on post-market wrap. I even talked about it on the Wolf Financial Spaces Monday night, that this had a little bit of a story trading setup to it because not only the technicals looked really good with a low RSI here, but this started moving right here on reports, not the actual execution of it, but the reports that Facebook would be cutting staff, cutting costs. And I mentioned that's really good for sentiment because the sentiment a few weeks ago was after earnings was, hey, Mark Zuckerberg doesn't know how to manage his company. Look at the bloated staff. The revenue is going down, but their expenses are exploding. Like, what the hell's going on over at Meta? So when the reports over the weekend that they're going to be cutting staff. That was good for the stock. And then when you look at it technically with a low RSI, and it almost looks like, hey, it's heading for a MACD flip. Look at that RSI 37 and the 20 DMA at 112. I mean, this was a story trading setup, multiple pillars working for you. And then this morning, you had the actual news. Now, sometimes you get like a sell the news event, but I think this is so oversold, and the technicals are so good in terms of the RSI being low and the MACD flip and the 20 DMA possibly being a magnet, that you're seeing the stock move up on this official report. And you can look at it in the news feed, cutting 11,000 jobs, and they're going into capex, reducing capex, reducing opex. All of that is in there. And I think there's a possibility this continues to run to about $112. Now, the path it takes there, you don't know, right? If CPI comes in hot and the market crashes, maybe Meta pulls back and then reaches 112 and declining. Don't forget, that's a dynamic declining line on the 20 DMA. But this one worked well. I gave this alert also as a suggestion to the fund I'm now consulting with earlier in the week, that this is good for a multiple, basically a swing trade because of this setup. So that worked out well. Now, why is Tesla up, right? Well, this happened before. We've seen this with Tesla before, and the trend is your friend. When it comes out that Elon Musk sells shares, I think he sold about $5 billion or $4 billion worth of shares, right? You see a relief rally. And I always like to relate it to market psychology, right? Why do you see this relief rally? Because the worst thing that can impact the stock is uncertainty. When you see a stock price going down and you don't know why, now, hey, I know why. You know, from my perspective is I pay attention more to fundamentals and technicals, right? So, hey, it's heading to the 200-week moving average anyway. The company's overvalued. But for the Tesla bulls who trade mostly on sentiment, right, they're like, why is it going down? Why is it going down? And then when they can assign a reason to it, oh, Elon Musk sold? Okay, well, that makes sense, right? I don't have to fear anything else now. There's no fear, uncertainty, and doubt anymore. So now, you know, we can bid the stock back up. And also, there's the functional thought of, hey, if Elon Musk is now selling, the selling pressure is now gone, right? So that's what you're seeing here. That's why the relief rally now. Now, I don't know if this is going to last. I think over a swing period, it's heading lower. I'm not changing that thought to at least 160 at 200-week moving average, and then we'll take it from there. I think that's a good enough target for me. I'm hearing a lot of people saying like the 1-teens. I'm not buying that for now. I think the 200-week moving average is a good spot to go and then reassess what's going to happen with Tesla. But it's very possible you get, you know, a rally here, and it's definitely going to be impacted by overall markets as well. But that's why when Elon Musk, when these Form 4 comes out and he sells, the stock isn't cratering. It's a relief rally and I just explained the psychology behind that. So that's what's going on with Tesla. Now, another big story, Disney. Okay, let's just group these in. Disney, Lucid, UPST, Affirm, all last night in extended hours at new 52-week lows, and they're going to be challenging today in regular hours. Disney $90.23. All of these are poised to hit new 52-week lows. Disney looked like a really big miss. So, you know, I don't know. I don't really have an opinion on this stock except to say that if a general, right, let's see, $182 billion, not like a major general, but this is a good one as a proxy for consumer discretionary spend, I think. All right. Now, I looked at some of the reports on Disney, and it didn't specifically talk about consumer discretionary and macro. They seem to attribute things to cyclicality, mostly from the articles I read. But you know, with a stock like this hitting new 52 weeks lows, I don't think it's going to be good for sentiment, and could be a harbinger of, hey, if CPI is really hot, what do you got to watch? You got to watch a 200-week moving average on SPY. So it's a greater chance now. You start adding, you stack these catalysts, right? Stack them together. A hot CPI, Disney, stack them all together, and you're like, yeah, it looks like increasingly likely we're going to test the 200-week moving average on SPY, and then we got to reassess when we get there. So definitely a risky environment, and you got to be prepared for tomorrow with some cash, I think, after CPI comes out. All right. So we covered those. And then look, these stocks are they're just overvalued. Lucid, Upstart, Affirm. And I'm just highlighting these companies because I think look at this. UPST $392 to $15. All right. And I've been saying this for a while, and I'll say it again. We're entering a period where you're going to see dozens of companies, maybe hundreds of companies, but dozens of even like high profile companies like UPST and Peloton possibly going bankrupt. Okay. So I remember this. I lived through it and after the dot-com bust. And this is very similar so far. I've been saying it since November. Very similar cycle to the dot-com bust. And it looks like we're entering that period in the next year or so, where growth companies that are not making a profit, a lot of them will go belly up. Okay, so just be prepared for that. Now, getting into some specific news on stocks we follow. Kodak on the post-market wrap yesterday. We covered Kodak. We looked at the earnings closely. Sequential drop in revenue and earnings, and I didn't see anything qualitatively exciting. I sold all my shares in after hours last night. I just don't. This stock really tends to move with the market, but I don't see anything anymore that will differentiate itself to outperform the market. So I'm not interested in just holding a proxy to the market right now in Kodak, and it might have a bad day if other people see that news like I did. So I enjoyed the opportunity. I thought being able to sell at in the 560s yesterday. You can see the ask is 567. I thought I got a good deal on that because the stock's been up significantly in the past month. Okay, so that's Kodak, and not on my list anymore as something of a high interest in the short term. All right, some other news out here. PTE, this is one brought to us by Matt Kolb. They got an unsolicited buyout offer for $1.25. So be careful of this one. I think this is one you could buy the pullbacks on, and maybe right even here. You can see the support early in pre-market. It kind of opened at like 94, 95 cents, and now it's finding support there. Maybe it's a good buy here for like some intraday trading. This is a non-binding offer. And not only is it a non-binding offer, but there's like a lot of conditions that have to be met as well. If you go look at the SEC filing, a whole host of conditions that have to be met, plus like a 60-day due diligence period. So there's got to be a discount off that 125, and it's got to be fairly significant. So don't expect this to shoot to 125. And I mentioned this morning when it shot to like 113, I'm like, this is getting ahead of its skis. So keep that in mind. The fundamentals, which should keep it well below 125 for right now, but the dips may be viable possibly for some day trading here today on PTE. Also, we want to reach out to Matt Kolb, who's close with management, and we did. I tagged him to find out, what does he think management's thinking, right? In terms of a 125 offer, are they going to accept it? Are they going to reject it? Do you think they're going to be able to renegotiate to a higher price? Getting those insights will also be important to get a trading edge on PTE if you do try to trade that. Now, bunch of other earnings out. DSKE, at first glance, the earnings look great. But I dug into this, and I dug into the reaction on the price chart back here in August 2nd, last earnings report. The earnings look great then too. I mean, this is such a low PE of 6.83 trailing, and their cash flow is very high. They're doing buybacks. I mean, I think their cash flow multiple is like 5. The problem here is the last couple quarters. So while the raw number is very, very good, the market is reacting to the year-over-year drop in revenue and especially in profit. I don't remember how badly the revenue was impacted. It was really the profit year-over-year. I'm not sure if it was a margin issue or what, but I'm avoiding this now. After I did that research this morning, I saw how it reacted last quarter on really good earnings, but because it was a year-over-year drop, they're out. So I'm avoiding DSKE, even though the long term, fundamentally, this may be a great company. You may want to look into it. LLAP, remember the stock? We traded it this day when they had a deal with Lockheed Martin, $100 million investment. And now the earnings report came out, and it looks pretty interesting to me. I mean, I have very high growth, robust growth over here, still far away from profitability. I'm just mentioning this for those of you who want to look into it further. Not sure I saw anything compelling to say, hey, we got to buy it now because they're not profitable yet. And I think they lost like $25 million in the quarter. They have like 25 million cash, now 125 million cash with investment from Lockheed. So I'm not sure that this is the type of environment that is really going to award this stock today, but I could be wrong. And it seems like a solid company growing very fast and Lockheed Martin behind them. So put this into your aerospace category, which is a good hot sector right now, right? The new fangs. And maybe this is something you want to research and maybe hold on to. And who knows? Maybe it's good for a trade for today, but I don't have a really good feel on what it might do today. Didn't really have like an explosive report. If they had big EPS, positive profitability, those companies are taken off after the earnings reports. Didn't see that here, so I don't have high conviction in it. All right. Just want to point out MEDXF. I don't know who it was, but on a show we had on Zoom a few weeks ago, someone mentioned check out MEDXF. I put it on my watch list, and it's been up ever since. And I can't even find the person who suggested it. I mean, this thing is up like 100% since he suggested it. I'm like, damn, should have followed up more. But they had what seemed to be a really, really good earnings report, at least as far as the top line. So they're still not profitable. So that's going to be a problem. Net loss. With the adjusted net loss, right? Cash of only $10 million, but very, very high growth story. And the EV to revenue ratio seems very, very low. So there might be something there, but we might be a little bit late. RSI is getting stretched, 200 DMAs. So I'm certainly not going to chase this, but I'm bringing this up again. If anyone is familiar with MEDXF, or if you were the one who presented this to us on Zoom or mention it to us on our Zoom collaborative session, which, by the way, we'll have today at 4:30. And I think hopefully Tony will be on talking lithium 4:30 if it's still available. So make sure to tune in there. So that's something to look into. GFS had a couple upgrades this morning, or at least one, with a price target upgrade to like from $62 to $72, something like that. So we did well with this yesterday. I kept some shares overnight. This is definitely getting hit with the market. Let's see if we can find some levels on here. What was the top of this candle? 61. We're below that 60. Look, there's a lot of bullish things forming for the intermediate term. The 28,200 bullish cross happening like today. The stock is above all the key moving averages on the daily. So it could have some volatility here. But this is something where I think you can buy the dips. The earnings were really, really good yesterday on GFS. You can take a look at that, take a look at the ratios, and see that new candle just came in. So confirming we do have a bullish 20 over 200 cross here on GFS today. So you can get a pullback. This would be something interesting to buy the dips on or sell puts on. Looks like a fast growing and at this point cheap company as far as their PE ratio. So something to look into. We talked about Talk yesterday, broke the 20 DMA yesterday, relatively low RSI. I did like the report yesterday because of a new CEO and basically adamantly saying they're going to reach profitability without needing more money. Both of those are very good. Target is at 95 cents and dropping the 50 DMA, but we did have an analyst come out today while maintaining market perform SVB, reducing their price target from 2 to 1. So I don't love that. Obviously, I would like a price target increase. So that may dampen activity today, but I'm not really changing my outlook on this. I'm going to stick with this and hope we get a move to 95 on a swing with Talk. DRIO today, they said their earnings are coming out Monday after the close. Really, I'm a little bit concerned. We're not seeing a heavy flow of PRs coming out of new contracts. So a little bit tentative going into earnings on Monday. So we'll just have to see what happens with that. XXII, a big sell the news event yesterday. Looks like it's poised to rebound today. I did talk about this on the wrap and during the day. You got to admit this has a chance of going to like just above 1 technically. 101, 102, maybe even new lows. That's on the table, but I'm hoping the strong, I think, sentiment on this stock will help it. It closed just below that 50 DMA, as I'm hoping it's not going to stray too far from that and get back into this chop zone, hopefully 113 to 130, because it definitely has risk from a technical point of view of a little bit above 1. Hopefully the 1 psychological level holds if that happens. But I honestly wouldn't be surprised if it does break down. This is just, they're not making money yet. And this is not a market that's going to reward money losers, especially when you have RK down and TLT down and get into a hot CPI. So be careful with XXII. This is one that is a speculative stock for the long term, has 5 to 10 bagger potential, but also has downside potential. You got to be careful with that. GAIA, I did mention yesterday, very interesting to look at this because when you go up on bad news, that's a really good sign as a possible inflection point in the stock. as a possible bottom in the stock. It's 926, so I'm going to have to fly beyond that. You guys can look into GAIA. I mentioned TWI could be a hedge, could act well in a down market. Agriculture stock had really good earnings, so that along with ADM better, CNHI better, TWI third in line, I think, as far as earnings. Clearfield earnings data is out. I'm a little bit surprised it's weak this morning. I think we're going to find stability here. It's just a guess. We'll see with the earnings date being announced, but you got to admit the downside to 77, 78. Yesterday, when the stock was in this spike down, I was pounding the table. It was like $85, and I looked at the $80 and $85 puts on this next month, and they were awesome. Looking at like $10 on those 80, 85 puts and give you like a $75 to $77 effective purchase price with a very high yield. That was very, very good. So keep an eye on Clearfield for great deals like that again. And with that, man, I really got to run. Market's about to open. But, out of everything we talked about, I actually think Meta is probably the one, and you can see it's up here. Meta is probably the one that's best poised for, and wow, nice pre-market price action. Best poised for possibility of a swing to 112, possibility of good day trade action. Meta, something to look at, and ADM. Probably my top two ones to focus on. I'm staying away from DWAC. If you guys are good DWAC traders, I guess go for it. Trump is announcing Monday or Tuesday that it's going to run, so possibly you get a secondary run. Some disappointment today with election results, but then maybe it moves up into his announcement Tuesday morning. I don't know. I'm staying away from DWAC. And RUM, if it goes too low before earnings, maybe that's something we'll look into picking up. But I got to run. I hope this analysis helped you out. If you are not a VIP member and you're listening late to this show at 4 p.m., if you're missing all the good stuff, you can join us for free, 7 days for free, by going to StoryTrading.com, signing up for a free trial. We'll give you access to our beta app where you can access some collaborative features in our community and access all these great events. And with that, wish you guys good luck. 9:29. Have a great day. We'll see you at 4:30 p.m. Actually, 4 p.m. for a quick post-market wrap, and then 4:30 p.m. on Zoom for a collaborative session. Have a great day.